Good morning, traders. My name is C. Thengema. Welcome to our technical analysis session. Please indicate if you can hear me. Hi, Wani, I see you there. Hi, Kim. Guys, thank you very much for taking time out over this nice long weekend to come through and attend our webinar. Hi, Noltando. Kim, I see that you are joining us for the first time. Could you please tell me how well your understanding of technical analysis is? Are you a beginner? Do you have anything that you'd like to share with us? Please, there should be a message there. The message field is at the bottom of your screen there. Using the chat tool. Noltando and Buani, I know that we've been doing these webinars for quite some time. You guys, don't attend consistently, but at least you have an idea of what we are doing here. Is there anything that you'd like to share with us, Buani or Nolutando? Is there anything specific? Are there any stock names that you want to bring out to my attention so that we can have a look at them? Okay. Exit my full screen. Hey, let me delete this information. Should be there. Kim, could you please send me a message there? I need to know I need to know how well do you understand your technical analysis before I carry on, because I know that some of the people that are here, they have a good understanding. People like maybe Buwani, Dirile. I think I've seen Dirile before, although I can't remember exactly when last I saw her in one of our. Okay, Buwani, your question, you're looking for the counterparty, the person taking our transactions. On CFDs, it is NetBank. On equity, CFDs. Forex, we have another liquidity provider offshore. So with CFDs, NetBank. Equity CFDs, NetBank, Buwani. Why is there any specific reason why you are looking for such information, Buwani? Udirile, are you joining us for the first time, Udirile? Is it your first time? Okay, guys. Please give me a stock that you want us to have a look at. We'll have a look at it. Any stock that you want to mention, any share. Udirile, Noltano, Buwani, Kim. Because Kim is not giving me the information I'm looking for. Let me go back to my chat tool there to see if there's anyone who's sent me anything. Okay. Udirile, yes, for the first time. Okay, Udirile, welcome. Udirile, I'm doing very well. I'm okay. I'm okay. You'd like us to have a look at FNB. Okay, I like your rapid response. There on FNB, Udirile, thank you so much. I know a few about stock, you know a bit about stock trading. Okay, it's fine, Kim. I get that. As a company stock market college, are you guys in relationship with NetBank? I don't know what you're referring to there, Buwani. If you're asking if we have any relationship with NetBank, we do not really have any direct relationship with NetBank as the business, because our contract is with, or our business relationship is with ProTrader, or Terminal Velocity as they call it. So our main relationship is with those guys, and ProTrader deals directly with a NetBank on our behalf. I don't know if that's helping. Kim, you're saying that you recently started trading. FSR is the code. Oh, okay, Dirili. Thank you so much. Okay, thank you so much. I'll have a look at FSR now. Let me try and make sure that I cover everything that one is looking for before we move on, so that we don't get disturbed along the way. Well, I mean, they don't necessarily have to own them when Buani. They do not necessarily have to own them, but I mean, they have the platform available to do that and enough funding, enough money to do whatever that they do there. I don't know how they cover themselves. I don't know how they cover themselves, but I mean, with CFDs, you must understand that you are not trading the actual thing. You are trading you're trading just a derivative. The guys are only looking at the price. So, because I mean, the name says it's a contract for difference. What it means is that if you make money for that day, they will give you money. If you lose money, they will take money from you using the underlying as the main instrument. They are just taking forward that performance. So no one really has to own a CFD or anything like that. Like if you are short, you have to give the platform, the trading platform provider, whatever amount that they are going to be paying out as a dividend. And if you happen to be long or holding a stock on a particular counter, sorry, holding some shares on a share, you need to pay the no, sorry, the platform, the trading platform provider needs to pay you the same amount of dividend that is being distributed at the time. So that's how it works basically. Kim, the minimum amount that you need to have with us is 5,000 to start trading your CFDs. The minimum amount is 500. Well, it depends on the volatility in the market, Buwani, in terms of the leverage. It depends on the volatility. If the market gets a little bit too volatile, I mean, they tend to sort of like, uh, restrict, lending and increase the margin requirements, like maybe from maybe 10% to 20%. So it depends also on the liquidity of the share. If the stock is very liquid, the leverage there tends to be a little bit looser. But I mean, if the stock is illiquid, they may even ask for a 50% deposit on a share. So that's how it works. That's how it works. I don't know if that answers your question, there, Buwani. Well, I mean, I don't know what you're talking about there, Kim. If you're saying that sometimes you get kicked out, I don't know what it means, but I mean, the minimum charge that we charge on equity CFDs is 30 bucks. So you need to make sure Hi guys, I'm back on again. Sorry about that. We had a technical glitch. Everything just went off, so I had to restart my machine. Guys, my apologies for that. Please tell me if you can hear me. Can you hear me now? Okay, Dirile, thank you so much. I think we've lost Buwani there. How can we get him back? Okay, Dirile, we're going to have a look at first round. Let's have a look at first round. So, Dirile, did you say that you've traded a bit or you've never traded ever before? Hi Jerry, I see you've just joined us, and Erasmus. Thank you guys for joining us. Noltando Madigane is still there. Okay, let's have a look at best friend. Okay, this is how I mean your charts look on your trading platform. This is the full screen. If you want to exit the full screen, you go there. If you want the full screen, you click here, and then you get your full screen. Let me remove this simple moving average that I have here. Guys, the main thing that you need to look at every time when you're checking your charts is the main direction of the market. The thing that I use to get that main direction of the market, I use the indicator called the simple moving average. To get that indicator, that simple moving average, you right click on your screen, you go down to your indicators, you say add indicator. Once you're here, you have to search under moving averages. Here we have about 10 moving averages. The one you're looking for is an SMA, the simple moving average. Then you go OK. You come to this window, the simple moving average properties. Here we are going to push up our period. Our period is 1. The default value is 1. We need to edit it to 10. We now have a 10 simple moving average, this red line that is being overlaid on your chart right now, your first trend chart. The moving average helps you to understand whether the market is, or the momentum is the market is moving up or moving down. Like in this instance here, you see where my cursor is, the price is above the moving average. So that means that the momentum is up, the price is likely to move up going forward. And here it went below the moving average and the price started falling. Falling. So that's what you use this for. So what you do to determine that the main direction of the market, you use the monthly time frame. You see you have different time frames on your trading platform. Where it says time, you see right now I have 1D or 1 day. It's a daily chart, or the daily time frame that I have here. So if you want to edit this, and if you don't have maybe your monthly time frame on your trading platform right now, you need to come down to edit here. You see where it says edit. Click on edit. Then you get these dotted boxes with a plus sign in them. You click on that plus sign. You get this small window with period and value. You change it. You're looking for a month. Anything that you're looking for is here. If it's a monthly time frame that you're looking for, this is where you are going to find it. You click here month. The value, we're going to leave it at 1, because I mean we only want the performance of 1 month. Like if you check on your daily, it's always 1D, which means that it's the period is value, the value is 1. So you go apply. Now when you go back here, you should have your 1 month. There's a difference. You must be very careful when doing this. There is 1 month, which is a capital M. That's for the month. If you put your cursor on it, it's going to say value 1 period M. If you go to 1M, which is a lowercase or which is a small letter, you're going to get 1 minute. The period there is 1 minute. That's the period that you get there. Okay, so we are now looking for our one capital M, which is the monthly time frame. The default value that you get there is 10, but I mean you can change it to 20 if you want to get more data. That's the data that you have. And another thing that I want to show you guys is okay, Udirile, we'll have a look at that position that, oh, okay, we'll talk about the position that you have. But I mean, for now, I just want us to do some analysis on this one. Okay, currently we are using, the candles. There are different chart types that we have. If you go there on your screen at the top, where it's got those candles, you're going to get the different types. When you put your cursor there, it says style. There is an arrow there, a down arrow. We have line charts, bar charts, and candlesticks. So we are going to be switching between candlesticks and line charts. Candlesticks and line charts. Let me show you how to read these charts. You see the candle that I have my cursor on right now is for October 2014. This was October 2014. Where this body starts, the body, where the shaded part, we call it the body. So where this body starts, at here at the bottom, that is called your open. That is where your price opened. At the top there, it shows here. This is where I'm talking about. I'm talking about this area here. At the bottom there, it says open, and at the top of the shaded part of the candle, the whole body, that top part is called the close. It closed at 47.20, and that small wick or that small tail that we have there at the top is your high. Your high there is 47.44. Your high is 47.44. Below the body of the candle here, this tail that we have here is the low of the day. Is the low of the day. Where it ends, it marks the low of the day. So we look at candles to see where we opened, where we closed, what was the high for the day or for the month or for the week, and what was the low for that specific period. That is the main reason why we use the candlesticks to also to see the size of the candle to decide whether there is enough volume supporting that move in a particular direction. Okay, now we're going to switch on to the line chart. The line chart looks very easy to those that are new in trading because I mean it's just one simple line going up and down. So if you follow that line and use that line chart correctly, you can actually arrive at a very good decision where you can decide whether you want to buy or sell the stock depending on how your chart looks. The main reason why I use the line charts, I use these turning points. You see, every time where these charts turn, I use those turning points to decide whether there is support or resistance in that particular area, or whether the stock is likely to break above or below that area. So that's how I make my decisions. I'm still going to explain to you what support and resistance is, but for now, I just want us to be able to, understand how I mark these turning points on my chart. You see this turning point here. I'm going to have a line, a horizontal line here. The price is trading way above this area here, but I'm going to mark it as my turning point. I'm not going to mark the whole chart because I want to mark the part where the price is currently trading or where the price is likely to go to next. So that's my main focus right now. I need to make sure that I mark those areas so that when the market gets there, I'm ready. I do not react. I know exactly what is likely to happen in the market before the market even gets there. Okay, let me show you the levels that I've marked on this chart on first rand. I've marked this turning point here. This happened in Feb this year, 2018, and I've marked this point here. This turning point was in December 2017, and I've marked this other point here. This was January 2018, and this point that I've also marked here, this was back in April 2015. So the main levels that we are looking at that level of 73.91 or 74, if you want to call it 73.91 or 74. Sorry, 74 or 73.91, and the other level we're looking at is 67.33. Another level we're looking at is 66.39. Those are the levels that we are looking at that are currently controlling our market. And the level at the bottom here is 56.92. This level is very far. I doubt we are going to come down to 56.92 or 57. It will depend if the markets maybe decide to fall over the next couple of weeks or months. It is possible that the price may even come down to 56 or 57 on first rand. But I mean, if you are looking at a monthly chart, if you are looking at a monthly chart, April we were down 8.86%. That's almost 9%. We're negative, and month to date we are down 3.45%. And we have this overhead resistance through these levels that we have here. That is 67.33 and 66.39. These levels that we have here hold the key right now to what will happen to the market next. If the market fails to break above these levels, maybe in the next few days, then there's a good chance that we're going to see first rand maybe coming down a bit. One of the things that is causing maybe our banking stocks not to perform well right now is the rand weakness. The US dollar is actually getting much stronger against the South African rand, so that is causing our financial stocks to perform poorly around this time. So we are not really surprised to see first rand doing the way it's doing. The rand has a lot to do with what is happening right now on our financials. Okay, we've drawn these lines because I mean these are the lines that are going to determine where the market goes next. So we've drawn those lines. Okay, another thing that I want us to have a look at is we'll go back to the lines, those support and resistance lines that I've just drawn there. Another thing that I want us to look at is our moving average. When you analyze and you're looking at your monthly chart, you have to make sure that the price is above your line here, your simple moving average line. If your price is above your simple moving average line, or the candles are above your simple moving average line, it means that that market is rising, that market is going up. But if your price is below your red line or your moving average line, like here, the month closed closed this bar below the moving average, and the market started falling. You weren't supposed to come in and buy this market. You were supposed to come in and sell this market. And when the price crossed above your moving average line here, this was in August 2016, you were supposed to position yourself for possible longs in the market. You were supposed to go in and buy the market. But I mean, you cannot use this moving average in isolation. You have to make sure that you use it together with your with your support and resistance levels that you have on your charts, because I mean, those determine whether the market rises or the market declines. So it's important that you use those the right way. Guys, do you have any questions? Is there anyone who has a problem understanding what I've just mentioned here? I said when the price is above or the candles are above the moving average on a monthly chart, it means that that stock or that particular share is likely to move higher for the next for the next few months. So you have to position yourself for long. You do not sell a stock or a market that is trading above its moving average on a monthly time frame. When you see the price coming down below the moving time frame, you must know that that market is likely to come off. But there are other things that you need to consider before taking the short. You need to consider the support and resistance levels, where the price is likely to be supported and where the price is likely to be prevented from moving higher. The example that I like using maybe when I'm explaining support and resistance, I like saying that support is your ceiling and the floor is your support. When the price is okay, let me use this example that we have here. When this market was moving from this point here from 56 and 92, this was its support. This blue line here that we have here, this thick line that we have here was your support, and it moved up. When it hit this area here, this area was your resistance. When it got to this area, this is where your resistance was, and you could see that it couldn't take this area out as it go. Then it proceeded, it went higher, it hit that area here, and the following month, that same line that we have around 73, 91, 74 acted as resistance. The price came down to 66, and that area at the top was your resistance and this area was your support. But right now it seems like we have actually taken out the support. The last day, the last trading day for the month of April is on Monday. So if on Monday we close like this, there's a good chance that this area is going to become our resistance now. That area is, well, I mean, it's a range. It's 66.39 and 67.33. This area here is our range. That's where we expect to see the market to be kept, or every time it tries to go up, we expect to see this market maybe stopping between 67.33 and 66.39, around that range there. I think that's where sellers have positioned themselves in this market, or in this stock, first rand. Around there, I think there's going to be a lot of selling happening on first rand. Okay, guys, who did not understand what I was saying here? If anyone did not understand, please tell me so that I can go back and explain this once more. Did you all understand? Okay, the relay is asking, how do we get the moving average? Can you please show it again? Okay, the relay, I will do that. Okay, Udirile, this is how you get your moving average. You right click on your screen here. You right click. You come down to indicators. You go add indicator. Click on that. It's a moving average you're looking for, so it's amongst these moving averages here. We have 10 of them. The one that you're looking for specifically is SMA. You highlight SMA and you click OK. It takes you to another window, simple moving average properties. Period of simple moving average is 1. You can highlight it and change it to 10, or you can use the arrows here. There is an arrow going down and an arrow going up, and you go OK. If you check here at the top left corner, I have 2 moving averages there, but I mean, because it's one value, so you can only see one. I'll delete the other one. This is where you check your moving average. Your moving average is here, your top left corner. Sorry, top left corner. And we said when the price is above your moving average, it means that price is likely to go up, but you must not use that in isolation. The moving average, you must make sure that you use the moving average in conjunction with your support and resistance levels. That is important for you to decide whether the market is moving up or down. That is very important. And I'll say the price is moving up. It's above your moving average. When you see your price doing this, going below your moving average, and there is no support nearby. There is no support nearby. It means that that market is likely to come off. I don't know if that summary is helping, guys. Okay, guys, I'll move on to the daily time frame now. I was just marking these levels on the monthly chart. I'll move on to the daily now, daily time frame. Okay, let me see what the relay is saying there. What if the candle goes through the moving average? Is the market flat? If it goes through the moving average, hmm, I'm trying to think about what you are looking for there with the relay. Let me see. What if the candle goes through the moving average? Is the market flat? Uh, are you referring to something like this? You see what happened here in Feb 2014. Are you referring to something like this? Okay. It depends. If it's doing that from the bottom, it means that that market is beginning to rise. It means that that market is beginning to rise. And if it's doing that from the top, like here, like this area here, or just here, it means that that market is beginning to come down or is beginning to fall. But every time you see something like this, the market going through the moving average, it means that that market is thrusting higher. It's likely to move up going forward. That's what it means basically. Are you happy with that, with the relay? Do I make sense to you? Okay, thank you. Okay, now we're going to move on to a lower time frame because our start should be the main time frame, the monthly. Before you do the monthly, you cannot go to the daily time frame. You need to check the daily time frame first. Oh, sorry, the monthly time frame first before you do anything. Okay, now this is your daily time frame on first rand. I know it's very difficult for you guys to understand what's going on here, but the main thing that you need to focus on your moving average. You see, here the price started moving below the moving average. This was on the 7th of March, and the price went down to our support that we have here at the bottom. And from here, the price bounced off. It went up a bit and sellers came in once more. They pushed the price down. It went below the moving average and it came back down to that same support that we were talking about, that 66 67 area. It played around for a couple of days. It went up for a bit and sellers came in. They pushed the price below again and we closed below the moving average, and the price is still trading below this support area, but now it's our resistance. We'll see what happens on Monday when the markets open. But there's a good chance that the first rand is still going to remain under a bit of pressure. I do not really see the first rand taking out this area on Monday. So we are likely to see a depressed market when it comes to financials. I think going forward over the next maybe couple of weeks, I think the market is likely to remain a little bit depressed. So that area that I've just marked there, these two thick lines here, they are the main areas that you need to look out for if you want to take a long or if you are long first rand. As long as the market is below 67.33 and below that 66. 39, the price of first rand is very, very, very likely to come under a lot of pressure over the next coming days. I do not expect to see this price picking up before we take out that range that we've marked there, 66.39 and 67.33. I don't know what CPA means. What does CPA mean, there, Kim? Could you please explain what that means? I see that when you set your stop loss, you set your stop losses based on the previous day's close. That's not how I really do it. I know that a lot of people out there, they teach people to use the previous day's low as your stop, or have it just maybe a couple of the points just below previous day's low. But I mean, you mustn't do that. You must make sure that you understand how that particular market is trading. Is that market trading in a range? Is there a range where the market likes maybe I mean reversing around? If you see that range, you must make sure that you get your stop loss out of that range, because I mean if you do that, you're going to get yourself stopped out. You must make sure that the market is, you put your stop loss beyond the range that you see maybe on that particular stock. You must be on a lookout for those ranges. They are very important. Make sure that you put it out of the way. Does it answer your question there, Kim? Kim, are you still there? Okay, you have to make sure that it's out of the way. You must make enough room for your stock to be able to, to breathe. You mustn't have a stop loss that's too tight. That's why sometimes people get stopped out unnecessarily. I'll show you a trade where we got stopped out. That was really because of the stop loss, the direction of the market, or the analysis that we had made on that particular currency pair. Please remind me. That was the euro. No, it was GBP AUD, the pound, the British pound against the Australian dollar. We'll have a look at it. So this is my story, guys, on first rand. I see first rand coming under a lot of pressure over the next couple of days. Well, I mean, it's trading around between 64 and 67, and each time it gets to maybe 67, 67.50, sellers come in and push it down. So we need to take out 64 first. After 64, maybe we can look for 61. If 61 fails, then the next target should be 57. So I think it's likely that the price of first rand is going to decline maybe over the next couple of days. But I mean, we'll see. We cannot really foretell here. We wait and judge the performance of a share by exactly what it's doing. So that's it on first rand, guys. I think first rand is still going to remain under a bit of pressure going forward. Is there anyone who would like to bring up some share or some stock? Or I will share with you the, before you do that, I'll share with you the GBP AUD that I'm talking about here. This is the trade I'm referring to. I think I've drawn my lines here. I had a look at it this morning when I came in. Oh, okay, it doesn't have the lines. Okay. We'll do the monthly chart first. We'll make it a line chart. Let's try and get these turning points. We'll start here around 2014. I know it's far back, but we'll do it. These turning points are important. Now I'm marking this one here. This happened in September 2014. I'm going to mark these 1, 2, 3. This was in October 2014. This was in July 2014. This was in April 2014. And this one was in 2016 March. Why I'm marking this one dotted? It's because it's very important. It applies to what the market is currently doing. It applies to what the market is currently doing. Okay, I'm going to mark these also. This was in 2014 March, 2014 May. Yeah, I think these are the only lines that I need to draw on this one. Okay, let's refresh. You see, this turning point here that we had in April 2016 prevented the market from going beyond this point, going beyond that dotted line, and we have immediate support around 181, 1581, around 1.81, 581. We have some support around there. Let's go to our daily chart. Let's now go to our daily chart to see what is going on there, or what the market did when it got to that line. Okay, the first thing that I want to show you on on the GBP USD is that when the price got first got here in March, the 27th of March, sellers came in, they pushed the price down after reaching that area. It was down for a few days after that. And again, on the 9th of of April, the price reached that area. The sellers waiting there, they pushed the price down again. Again on the 16th, the price went up there, sellers were there, they pushed the price down again to our support at the bottom. You see, we are not very far from our support line here, around 1.81581. And again on the 25th, before this recent drop down to the current levels where we are, the market went up there and sellers came in and they short the market. We are using the resistance line that you got off the monthly chart. So the monthly charts are very important. They can help eliminate a lot of technical analysis that you do on your charts. Just by understanding those lines, you know that when the market approaches those lines, you need to check what the market does next. So this is what happened. We gave out a sell signal. I think it was on Thursday or Wednesday. We gave out a sell signal, but I'll tell you where the problem was. The problem was the stop loss. The stop loss was too tight. We used the previous day's high as our because we are shorting. We used the previous day's high as our stop loss. The previous day's high was 1.84567, and we had our stop loss at 1.846. At 1.846, and the market did what? Okay, no, it was here. We used 1.846, and the market did what? It went up to 1.84628. 28 pips were out of the market, and immediately after that, the market started. No, in fact, it wasn't this one because on Friday we were not there. Sorry, it was this one. The market went up by 112 pips, beyond our point. It went to 1.84712. After that, it closed below our resistance line, and on Friday, it went up for a bit and it came right down to the current levels. We were down 1.29. So those that still had this short position, they made money. But those that used the stop that we had set there at 1.84610, they lost a bit of money. Okay, so let me show you what I'm talking about when I'm talking about the range. This is what I'm referring to. We'll use this point here. So you see the market came up here in this range and it came down again here on the 17th. It hit that range, it came down it came into this area between the dotted line and the solid line. It came there again, and on the 25th it did the same. It went up there, it stopped just in the middle of this range. Again on the 26th it sailed up, between the range, and again on the 27th it was there between this range here. So when you create your stop cannot be within this zone here, because the market likes playing around there. You have to make sure that you push your stop out of that range. Like the stop had to be around 1.4800. That's where the stop had to be here, around 1.4800. I know that here we had this spike, but after that spike we never had the market going beyond this point here. So that is why I'm saying that this is our range. This is the range that you must use. If you want to make sure that you get that range right, you must use your hourly time frame to mark that range, to try and get that range. Okay, let me see if we are going to get it using the hourly time frame. I've just applied the hourly time frame now. Hourly time frame, let's change it to an hourly. Okay, we are going to draw another dotted line at where the hourly time frame closes each time it goes up there. Okay, so around this point here, this dotted line at the top, let me make it, how can I, let me make it another color. I'll make it, I'll make it red. You see, you cannot have your stop around this area, because you see every time this market gets here, it comes down. You have to make sure that you put it somewhere beyond this point here, around 800, like I said, around 1.84, 800. That's where you put your stop. Now let's go back to our daily chart. After this, the market started falling. So those guys that put their stops, according to that 1.8600, they lost money. Check where our our red line is. It's right. It's right on just above that 1.84600. The exact amount I think is value. I think is 1.84626. So your stop loss had to be out of that area, and the guys that went in there, they lost money, and the market did what? It went back down again. The market went down. So the call was right. The market was going to decline, but the stop was not spot on. So it's important that when you do your trades, make sure that you get your stop losses right. Like at this point here, you see this line. I'm going to make it a thick line. I'm going to this thick blue line here at the top. This is where I expect the pound against the Australian dollar to start strengthening again. Remember, this turning point, we got it from the monthly time frame. So the market is likely to respect this area as it has in the past. You see here, this was on the 20th of March. The market came down a bit. It left this nice tail behind and started moving higher. It tried to come down to this zone again. This was back in this was on the 5th of April. The market went back up again to that zone at the top, and again here on the 19th, the market tried, and the buyers came in and they pushed the price up again. I hope that we're going to have the same kind of situation happening here with the price approaching our our support area there at the bottom. Okay, I will make this yeah, I'll leave it as blue. So, in my view, this is between the blue dotted line and the thick blue line. I think that this is our buy zone. Around here, I think this is a buy zone, and this is where people can look to buy. The GBP, AUD on maybe on Monday or Tuesday or even Wednesday. I don't know when we are going to get a signal here, but we need to get a signal first before we decide to buy that area. If we get a signal around that area, we could actually look to go in and buy. Every time it gets here, you see what it does. It returns. So around this area here, in my view, 1.81200, 1.81600, that is a buy zone on this one, unless if it breaks through that breaks through below that area aggressively, then maybe we can look to take more shots on this market. Are you guys okay with the stock or the currency pair that we've just covered now? Are you guys okay? Do you understand what I was saying there? Does it make sense to you guys? Let me see. Noltando, Dirile, Erasmus, Kim. If you had used the highest, the highest projection, I don't know which one you're referring to when you're saying the highest projection. Let me see. Let me open this chart up. Are you talking about this one, or are you talking about the area that we mentioned that the stop had to be beyond this area here? What are you talking about with the relay there? Uh, you still be in a trade, or in fact, the trade could have triggered your take profit, because our take profit on this one was 1.8200, sorry, or was 1.82. It was here, 1.82 here. This is where it was our take profit. It was here. You could have made quite a bit of money out of this trade. You could have made a lot of money if you were still short. You could have made money. Okay, guys. Any other share that you want me to look at, applying the same technique that we use to determine whether the stock is a buy or sell? Okay, it's fine. We're gonna look at clicks with the relay. Let's. Okay, let me see. You're saying if we buy at Erasmus is saying if we buy at 1.8160, where should we sell? Let me see. If you buy around this area here, maybe you can look to sell again in the same zone here, around 1.86, around 1.8 46, 1.846. That's where you can look to sell, or anywhere around this zone here. You can sell maybe around 1.845, 1.8 500, 1.8 400, anywhere around there. This is where you can actually look to dump your stock, as long as you are above the blue dotted line here at the top around 1.84236. You can actually look to sell this market there. Oh, Erasmus, I was waiting for you to finish typing your message. Okay, it's fine. Oh, okay, okay. You're welcome. You're welcome. You're welcome. Okay, let us look at clicks. Clicks has been on a massive surge over the past couple of months. It's actually done very well. 2017, it was up the whole time. Okay, so if we are trading this market, okay, let's see. From 2014, you see here, 2014. This was in March. It went through its moving average. It went sideways for a couple of months. Then it started doing what? It started rising. It went sideways for a couple of months. it rose, and here it went below your moving average. It was down in December 2015, January 2016 it was still below, and in Feb it went above the moving average, February 2016, and it started rising. I want us to mark this area here. I want us to check really what happened here. I will change this into a line chart and we will draw our lines, and I want to show you why those support and resistance levels are important in your trading. You see here, there's a bit of a 10 here that happened, so I'm going to mark this area also. I'm going to mark this area, and I need to go back to my candles again. You see, when the market went below the moving average here, you had this support area here at the bottom between these two lines. That support area was 85, 85.79 and 81. So you did not have to panic when the market went below this, because I mean you had this support here. It wasn't like massive support, but you could see that it was support because I mean the price came here in 2015 May. It stayed above that area. It tried again in 2015 June, and it shot up. 2015 June, it shot up and it just stayed above that line there. And this was your support area on clicks. I was just showing you that you mustn't say that, but I mean, it went below the moving average. You're supposed to go in and sell. Yes, it went down below the moving average, but I mean, you weren't supposed to go in and sell because you had your support nearby. Your support was very close here. So you were going to lose money if you had gone into take a short trade here for a long time. You were going to lose. After that, the market started rising and people were supposed to go back in again and start buying, and the market went up. 2017 again, we're still trading above our moving average on the monthly time frame. So all you had to do was to stay on the long side. Let's go back to our chart again. Let me see if I can use the previous. Okay, let me not. Okay, this is the turning point. This turning point we had in December 2017. I'm going to mark it. Okay, this year we had this turning point here. This was in February 2018. That was our turning point, and here something happened here. I will mark this point. You see we had some turning points here, but I mean it's a little bit confusing, but I mean let's draw these lines anyway. It doesn't cost anything to have these lines, but yeah, the main thing is we are still above our moving average. We are still above our moving average. Hey, what is this line doing? Okay, right now we are trading above this line here. Should I make it bigger than this? I'll make it bigger than this. This the thick blue line there is our support right now. Every time the price of clicks comes down to 181, buyers come in and push the price up. Another support that we had earlier, we had this support. That area is 169.21 or 170. That area was our support. Another area of support that we had earlier was 158 or 160. It came down here briefly. Buyers came in, they pushed the price up, and the price stayed above this blue line here around 169. And 181, 182 was your resistance. The moment we took out that 182, the market started rising and it went up to the levels where we are now, and this area is our support. Let us check what's happening on the daily. The daily is going to give us more details. Okay, we drew this using our daily, our monthly. You see the price came down, it went through this area, it came down to the support. We went above our moving average in Feb, and buyers started buying. The price, rested a couple of times just above this 169 or 170 before moving higher. And it tried maybe a couple of times here. Let me make it bigger. It tried a couple of times here. It tried to go below, it failed, they pushed it up above the line. Again here it tried, they pushed it up above the line. Here again, it tried to come down, they pushed it up. Here, here, and here again, it tried to come down, they pushed it up. So it traded above this area, and buyers started coming in, and the price started rising. The price of clicks. So in my view, clicks is still a buy, but I wouldn't go in and buy clicks right now. I would wait maybe for a pullback. If we may get a pullback, let me see where we may get a pullback down to. We'll use the daily time frame. We may get a pullback to we may get a pullback back to this dotted area here. Our pullback maybe could come back down to like 190, 191. When that pullback is going to come, I have no idea. This price could carry on moving higher and higher before we get that pullback. But right now, clicks is looking very well. It's been rising. It's been doing very well. Guys, any questions with regards to clicks, or is there any other stock that we can look at other than clicks? We still have a bit of time. We still have about 15 minutes. Okay, really, let's have a look at Woolworths. I think okay, okay, really, thank you. Okay, let's mark these turning points. You see where the price is trading. The last trade price on Woolworths is here. That close is 62.68. So we are concerned more about this area here at the bottom. So we need to try and put our turning points there. This is your turning point. We're marking this turning point here. We're marking this one. That is the turning point we are marking. And we are supported. Well, in my view, we are supported between. There's another turning point here, but it's very small. It's in the middle. It's in the middle of our range there. But I just wanted to give you an overview with regards to the range there. 59 and 60 is our main support on Woolworths, but I mean there is a range. That range is, well, I mean this range was created like late last year, 2017 in October. That range is 56 and 60. In that range, 56 and 60, Woolworths is buyable. 56 and 60, Woolworths is buyable in that range. I think that we can actually go in and buy Woolworths. Let us get our overhead resistance levels on this one. We have our overhead resistance here. We have our overhead resistance here. That overhead resistance is around 64. It's around 64 on Woolworths. Every time the price gets to 64, sellers try to push the price lower. Okay, another area is 65.52. We're talking about this on a monthly closing basis. We're not talking about the daily closing basis. We're not talking about it on a daily closing basis. We're just talking about the monthly. The monthly is very important for now. Okay, so those are the levels I'm looking at. I'm looking at 69.74, looking at 65.72, 63.98 or 64, 60 and 59 and 56 at the bottom. Okay, you see, every time the price comes down to 65.72 or 66 area there, it leaves these tails behind. The first one around that area was in August 2017. Again in December 2017, the price tried to go beyond that area. Sellers were there. They pushed the price lower. January, they tried. They failed. February, they tried. They failed. The price closed below our horizontal line. Again in March, they failed. And again in April, they have failed. But every time they come down to this area here, that 66.59 area, there are buyers waiting there all the time to buy the price. Like I said, between 59 and 56, it's a buy zone on Woolworths. There is some value around that area. Each time the price pulls back down to those areas, buyers come in and push the price up. No, I cannot recommend that you sell Woolworths because I mean it's stuck in a range. If you're an aggressive guy, maybe when it gets to 67, 66, you may go in and sell Woolworths, but it's that's for aggressive guys because I mean you'd be selling it back to maybe 60. If you are aggressive and you're experienced in the market, you may do that. But I mean, if you are still new, I suggest that you don't do that. So this is our daily time frame now. So these are the levels we are looking. These are the levels we are looking at. We are looking at this 59 here. You see, it got to 59. They bought it. It went up to 65.72. It came down. It had this uh, uh, I mean bearish reversal pin, came down, is below our resistance at 63.98 or 64. So it's possible that we may see the price of Woolworths maybe coming back down to 59.60 zone again before moving higher. So if you look at it, we've been trading in a range, in a very tight range. Let me mark it using the daily time frame. Let me see if I can get it. Let me mark this different color. I'll mark it a different color. Okay. This is our range. You see this color here around 67.32 and 59.20. This has been our range for quite some time. So if you see, let me try and delete these so that you see the range well, because I don't want you to have too many lines there. Let me try and delete these. They're important, but the main range that we are looking at currently is 67.32 and 59.20. 67.32 and 59.20. If it comes back down here to 59.20, $60, I think that's where you can look to buy Woolworths, expecting that maybe the price would go up towards 67 or 67.50. Are you guys okay with Woolworths? I think that's all I have on Woolworths. That's all we need to look at on Woolworths. Those are the levels that you need to mark. If you see the price of Woolworths coming back down to 60, 59 levels, that's where maybe you can look to buy if you get a nice bullish candle from those areas. This is what I'm talking about. If I'm talking about a bullish candle, you see the price came down here and it produced this nice bullish bar. We are up at 3.39%, and the next day the market went up like 9%, and it got to that area here. And again, around the 4th, the price came down here. The following day, it was up 1.7, bouncing off this area, and it started rising, going back up there. So this is the area that I'm talking about, the buy and the sell. So if it gets here, if you're an aggressive guy, if it gets here, if you're an aggressive guy around 67.50, that's where you can look to sell. When it gets here at the bottom here, that's where you can actually look to buy. Woolworths. Okay, guys, thank you so much for waking up early to attend our webinar session. If you guys have more questions, you are welcome to ask or send me an email. My email address, sihle at quicktrade.co.za. Okay, okay, I think it's right. Sihle at quicktrade.co.za if you guys have any questions. Otherwise, thank you so much, guys, for attending our webinar on the long weekend, so early in the morning. Thank you very much. Have a great weekend. You're welcome, guys. You're welcome. We'll see you again on Monday. If you are available on Monday, please do join us. Thank you. On Monday, we started, well, I mean, during the week, we started 12 and end our sessions around 1, anytime between 1 and half past 1. It depends on how interactive the attendees are. If they are interactive, they're asking questions, they're coming back to me with issues that we need to look at. We take a bit longer than usual, so we get to finish around half past 1. Otherwise, most of the time we finish just after 1 or 5 past, 10 past 1. That's when we end our sessions. Noltando, are you getting this? You've been very quiet here, my sister. Are you getting this? If it's confusing you, let me know. I can try and help you where you're getting confused. Okay, guys, thank you so much. Bye bye.